Hey everyone, this is Drake on Digital and Abs. Welcome to the DeFi Edge podcast, where we will provide crypto and Web3 alpha. Our area of focus, and it's not limited to, it will be around discussing the macro markets and old, new DeFi game theories, strong narratives that's currently ongoing, and of course, NFTs. Ultimately, giving you the edge to win in your DeFi journey. So today we will be discussing, some layer ones, layer twos, bullish cases, bearish cases, and which projects to really just look out for. This is episode 1, and just want to throw it over to Drake and just kind of do a quick intro, given that this is our first podcast.
Hey, what's up, guys? All right, so first off, I want to make a disclaimer. Like everything we're gonna say on this is gonna be top signal, so make sure you fade everything that we say. But anyways, guys, in all seriousness, we're just gonna be chatting around on DeFi stuff. We're just a bunch of degens. Well, me and Ahard are just or me and Abs are just a bunch of well, we can cut that, right?
No, this
Oh,
is just
whoops.
pretty fun.
Anyways, we can't cut it, guys. I'm sorry. Everything's going to be legit. So me and Abs, we're just going to be talking about what's going on in the DeFi space, and well, really, we're gonna have some other degens that come on in the future. So make sure you guys stay tuned. If you guys don't know who I am already, I'm just a dude on YouTube who talks about different crypto projects and how I get wrecked and how I lose a bunch of money, and so you guys don't lose money.
Yeah, thanks for that. So this is Abs. I've been in the space for many years now. I bought my first Bitcoin in 2015. I won it off of a poker tournament, and it was the quickest payout. And that's where I really started my crypto journey, just holding that one full BTC in 2015, which was around $800. So that was pretty amazing. But ever since, I've just been keeping my head in the books and kind of getting really I've just been really enamored with the whole DeFi space and how it's been, evolved to this point, and now NFTs is just blowing off, and we have all these new, old layer ones, layer twos, just kind of growing into the space, and some are dying, and it's actually amazing to see the level of adoption across the board. But I guess we just want to talk about some TVLs across the board, right? Total value locked. I think the idea is just to kind of drill down. Obviously, ETH is number one, right? Has a total value right now of $29 billion, which is just insane. And some hot ones that we wanted to kind of touch base upon is Arbitrum, right? Arbitrum, Optimism. Drake, what are your thoughts on Arbitrum and Optimism? Just kind of high level.
Well, Arbitrum is mainly getting most of its liquidity right now, in my opinion, with the speculation around the airdrop. Now, we still don't have any news on the airdrop, but a lot of projects are building over there. I mean, you got Dopex, you got a bunch of these solidly forks that are popping off and launching out there. Of course, you got GMX. I mean, you got a lot of people that are building over there. There's a lot of DeFi games, and when it comes to DeFi, the chain that has the most games is going to get the most liquidity. But don't be sleeping on Optimism. Velodrome is popping off. It's got, I think it's like, at time of recording, like $270 million in TVL. So if you
Wow.
guys don't know what Velodrome is, it's basically a solidly fork. And the best way to understand these, literally in 2 words, or yeah, 2 words. Wait, no, that's 3. The liquidity black hole is basically, yeah, you can look at it. So how these forks work is they have different not chains, but they have different dApps and protocols that list their governance tokens and their different tokens on their chain. And Velodrome is basically emitting their own token. And when they emit their token, this is going to be displaying the different APRs for the protocols that you have. But you have this flywheel that is created around the Velo token. So how this would work is if I wanted to get the swap fees, let's say, for example, GMX and Velo, and let's say it's just GMX isn't on Optimism. That's a bad example. SNX and Velo, which is synthetics. In order to get those swap fees, I would have to lock my Velo token and vote on that pool. and I would earn those liquidity rewards. And if I wanted to earn some of the Velo token, I would have to stake SNX and the Velo LP. And if I wanted to, as a protocol like SNX, incentivize liquidity for my farm or that pair inside the farm on Velodrome, I would have to bribe other Velo voters, which is another form of revenue for the protocol, or I would have to pick up some Velo, lock the Velo, and vote on my pool. So either way, this is driving demand directly to the Velo token by me as a protocol, Synthetics, buying it or bribing other people to vote on my pool. Now, the bribing part wouldn't be direct, but it's juicing the APRs, which is like, bro, I want to take share in that crazy high APR and I want to get some of that money. So I would have to lock my Velo and vote. So to summarize what the flywheel you have with this and why it's the liquidity black hole is, first, you have buy pressure on the Velo token. This buy pressure is coming in the form of people wanting to get the swap fees. And the reason why they get most of the swap volume is because they're the cheapest DEX, period. And we all know how that goes. Most people, when they're making swaps, they want to get the cheapest price. So once all the DEX aggregators hook up, they go through Velodrome. Most people are going to go through that. In order to take share of most of, well, actually almost all of the swaps, you're going to have to lock some Velo and vote on the pools you want rewards for. Now, the second part is, okay, this is great. Now we need to get liquidity. This is where the APRs come into play. They're all denominated in the Velo token. So as long as the Velo token has a high APR, more people are incentivized to deposit it into that pool, which increases liquidity, gives better trading prices, which then increases traders' volume or more volume on the DEX, which increases the APRs for Velo. And you have this cyclical flywheel constantly feeding itself. And that's why you see the TVL literally going up only. It has over a third of, actually almost a third of the Optimism TVL, which is crazy. Anyways, that's kind of long, but yeah, that's the liquidity black hole for Optimism. They have some of these solidly forks on other chains as well, but don't sleep on Optimism. Most people are flowing over to Arbitrum, and typically, yes, it always helps to go where the money is going, but you also want to have some money going towards other chains to where, okay, look, this is going to be the next narrative, not financial advice.
No, that's really interesting. So looks like Optimism has around, it's a little shy of 900 million in TVL. You did mention that Velodrome has 31% dominance. That's, yeah, I remember seeing this like kind of lower on the list, like outside of the top 20, to be honest here. And now it's sitting at the market cap. Is this 35 million? Is that what it is? Does that sound correct?
Yeah, actually, it would be less. I think it's actually less than that because you have to factor in a lot of the tokens are locked, remember? So they're
Understood.
locked,
Okay.
they're locked 4 years. So technically the circulating market cap is going to be much lower. And
Okay.
that's just how these solidly forks work. I play a lot of them, so I kind of understand a little bit how they work. And you also see a fully diluted valuation of like 178 million. That's if they hit their max cap, which I think for Velodrome it's going to be like 10 years. So I would say let me see if I can find how many tokens are staked.
Yeah. So it looks like yeah, it's the number one DApp that's on. So it's the leading DEX. Okay.
Yeah, by far. And that's like the liquidity black hole that's going on over there.
But I hate to. I just want to kind of ask you, since you've done a lot of research on this and also have played around with a lot of these forks. What is your, and I this is fun, right? What is your price prediction with Velo tokens and where it could be during the next bull?
Oh geez, I hate price predictions. I never do price predictions. However, this is going to be like one of those ETH halvening type of things, where in a bull market it's going to be way overpriced compared to what it should
Oh,
be,
yes.
and in a bear market it's going to be the complete opposite. I mean, you can already see the market cap to TVL is 0.17. in my opinion, there's still room for it to go up in price. And basically, what TVL to market cap means at 0.17 is that the TVL, being that it's like 270 million, and the market cap is like 40 million. What did you say it was?
35,
30,
38.
yeah, 35. That's the ratio. You basically just do 35 million divided by the 277. But I see, okay, so the supply that is locked for Velodrome is almost a billion. So there's 676, 156 million, whatever. So the total supply, what is the total supply? The total supply looks like it's over 800 million. So your liquid tokens are about 130 million. So let's do 130 times the 0.2. Actually, that they could be. I think Dex Screener is factoring in that. So let's see, 130 times. Oh, actually, no. Circulating cap is half that. It's about 15 mil, which is, in
Wow,
my opinion, pretty low. But that's circulating. I mean, you obviously got to factor in people do have token unlocks, but for the most part, most of it is locked for 4 years. You can actually see all these analytics on Dune. So if you guys ever want to find a place to find some more analytics on like the stats of like the tokens that are locked, liquid, etc., just check out Dune. Dune's pretty fire sauce.
very
So
nice.
yeah, I do see a lot of room to grow for Velodrome. One thing you do have to factor in is the flywheel goes both ways. So if Bitcoin nukes, all bets are off. But if it keeps going up and liquidity starts to come to optimism, I see that Velodrome is going to be reflexive to that. So an example of this would be if it keeps the same TVL to market cap ratio, which I think it will increase from 0.13 because I think that's kind of low. As liquidity is flowing into optimism, people will front run that, and I think it will get closer to maybe like zero point 0.5 market cap to TVL ratio. So what that would mean is since people are front running this and getting closer to a 0.5, this would mean like let's say for example it has half of Optimism's TVL when it hits $1 billion. That means it would be around I don't know 250. On circulating or on the market cap. So I could definitely see it doing a couple of X's from here as long as it gets to that 0.5 ratio, but that's not always guaranteed. So remember,
That's
this is going to be reflexive. So as long as it's growing, it's good. But as soon as there's signs that it's not growing, the market's already going to price in and be like, we're not growing anymore. The reason why a lot of the Arbitrum tokens are taking off is because the TVL is literally up only and they're front running it.
no, that's really solid analysis there. Yeah, obviously, with every single ecosystem, you have a leading DEX, right? You have ETH basically having Curve and Uniswap and SushiSwap. Arbitrum basically has Uniswap and Sushi, and then now Solid Lizard is actually coming up here in the ranks.
Sliz.
Um, yeah, and then you also have a quick swap for Polygon, and Avalanche has Trader Joe, and now Optimism here. You just basically went deep with Velodrome, and I think and with you, and I guess I'm in the same page as you. Velodrome is very bullish here.
Yeah, I do like Velodrome. But this is actually so actually it could be pretty bullish for Velodrome, being that most people front ran or are on the narrative on Arbitrum. I'm not saying there won't still or there isn't legs for it to keep running, but you already have a bunch of solidly forks on Arbitrum and a bunch of them that are actually coming. Sterling, they just launched yesterday, kind of went, it was okay and kind of dumped off, but it's leveling out. You got Ramses, they're coming over. It's a smaller one. It's basically a split off from Solidly on ETH. You already have Sliz, Solid Lizard, that's already on there. You'll have Zero or Xcal or 3Cal, whatever you want to call it, Excalibur. That one was basically a
So,
fail.
so I do have a quick question about the Solid Lizard, man. So what's the idea behind it? Why did it pop off in the last 2-3 weeks?
So Sliz, we were okay. So this was one that was in Discord, my Discord group. D's, he's in the group. He kind of pulled it up. He was like, "Hey, dude, they got a stealth launch on Arbitrum," and I was like, "All right, let's check this out." This thing was trading at 2 cents, and looking at the UI, it was like, "What is this?" It was horrible, but the APRs were nuts in hand, so it was like you couldn't resist. So threw a little moon bag. Let's see what happens, or coffee money, whatever you want to call it. Just wanted to see what happens. And obviously, I didn't pull the trigger at point 0.2. I waited and I was like, okay, let's see some volume. It goes to 0.6 or 0.06, and then I bought in, and of course, it dumps to 0.02 as soon as I buy in on top signal. So it dumps. I'm like, whatever. I threw whatever, just throw away money to see what happens. Now, here's the reason why it took off. Like, it ended up going to 0.02, but then it started taking off. And it had to do with bribes and people incentivizing the stakers, like the people with liquidity. And you also had confidence in the team. So when it went from 0.06 to like, it was almost 0.02, it was on the borderline of, hey, what are you guys going to do with your liquidity? Because the team had liquidity in there, but it was liquid. And we were pushing and pushing and pushing. And we finally got the guy to be like, all right, we're going to go ahead and lock the liquidity for 2 months. As soon as they did that, it started taking off. That instills confidence in the community because now you have the incentives aligned with the community as well as the team members, because now you have some faith, which allows this flywheel to be kickstarted. Because remember, the APRs are denominated in the Sliz token. So as long as those go up, that juices the APRs for all the LP pools, which incentivizes people to bribe because it's a cheap way to get liquidity. Let's say, for example, I'm Curve Finance, and I have two options. If I want to get liquidity from my token, the first option is I pay out my own incentives, which is the Curve token. Or I pay Solid Lizard and say, bro, I need you to direct some votes over here and pay some APRs over here, and I'm going to pay you or pay your token holders in order to vote on my pool to get incentives. When I do this, I'm basically like saying, hey, look, here's some money. Vote for my pool. And now what this effectively does with these solidly forks is for a week, I will get certain APRs on my protocol. So let's say I had 10% of the votes. I'm going to get, it's not 10% of the emissions. It's going to be like 10% of the 50 they allocate. So in the solidly coding, it depends on each of the fork and how they denominate it. There's always going to be like 50% of the actual emissions going to some of like the base pairs, like, hey, look, you can't change this. And then 50% that's able to be directed and voted. I don't have the exact numbers because they change based on each protocol. But the reason they do that is, well, actually, you can kind of see it clearly. If I let anyone vote on any of the pairs, all the protocols are going to be voting for their tokens. And my Sliz token isn't going to get any votes because it doesn't incentivize anyone for that. Unless, of course, you're locking and staking it. But you have to protect against that because you'll have these bribes that will be good short term. The long term for the token price, it won't be so hot. So again, in summary, to answer your question, what caused it? First, the team locking liquidity. When they lock the liquidity, this instills confidence in the community as well as the protocol itself. Second, this then drives the flywheel to say, hey, look, you want to bribe, get some LP rewards for your pool, because after they locked, it juiced the token price, instilled confidence, juiced the APRs. Now you have these protocols able to get liquidity at a much more cost-effective rate. One of them that is just going nuts and ham with it is F-Bomb. They basically get like $7 in liquidity for every $1 they bribe. I mean, think about that. I pay someone $1 and I get $7 in liquidity. It changes from time to time, but that's like a no-brainer right there. And it's just a cheaper way, and you have this flywheel going now where people are getting paid bribes. This incentivizes more people to lock up and stake, which kickstarts this flywheel. I would show an infographic so it makes a little more sense, but you have this self-sustaining economy where Token number go up, which increases more or incentivizes more people to buy. When token number go up, this increases APRs. When APRs increase, this incentivizes liquidity. When liquidity is incentivized, this incentivizes traders to use your DEX because you get the best prices. When traders are using your DEX, this increases trading volume, which increases the APRs for stakers and voters, which then increases token price because you got people speculating and buying the token, which then increases APRs. When APRs are increased, other protocols vote and bribe, APRs increase again, you get the flywheel. That's kind of how it works.
Yeah, absolutely, man. Great breakdown. Yeah, I see that Solid Lizard has 116 TVL million, of course, and then the last 7 days we're looking at 217% increase with the token price. So that's just insane, insane numbers. And this is a bear cycle. Like, are we still in one or what? um, but even I kind of want to touch upon Zyber Swap as well, since Zyber Swap that's with a Z, it's number 2 on Arbitrum right now, and the last month, according to DeFi Llama, on the last month, Zyber Swap tokens went up 15,856%. That is insane,
Wow.
right? And I recently just went onto there just to take a look at the APRs. They're still above 1,000. Zyber Swap with ETH pairing, that LP is paying out 1,188% APR. That is just insane numbers. And you can basically earn, what I'm seeing here is you can basically earn Zyber tokens, you can earn USDC, and you can earn ETH. This is why it's number 2 in this ecosystem.
So you just stake Zyber and you like I haven't even messed with it. I heard of Zyber Swap a couple days ago. I was doing some wallet searching, but I didn't really mess with it. It looked like a fish swap to me. I don't know if you remember fish swap, but on Arbitrum, it's basically just like a sushi fork. That's kind of what it looked like to me on Zyber Swap. So I didn't really look into it deeply, but it sounds like they're trying to transition to some form of a real yield. That's what it sounds like.
Yeah, for sure. And you have triple rewards. Just by pairing Zyber and ETH together, you can earn any of these 3 rewards. That is Zyber tokens, USDC, and ETH rewards. This is just, I mean, no wonder it's number 2, right? Because where else can you earn triple rewards?
Yeah, no
in a
kidding.
single protocol. But it looks good. I mean, the TVL on this right now is at 164 million, right, for the whole protocol. And then at
What's
the
the
time,
market cap of this token?
it is 9. It's not even 10 million. It's at 9.
Well, that's why it's taken off. Because yeah, I was looking at it, and you can see Zyber. I'm looking at these pools. It looks like the amount of Zyber they have locked. Well, 2.19 million of the Zyber token, or million TVL. So not of the Zyber token. So what is that? 20%, maybe 22%, locked for 30 days. You got another 12% locked for 7 days, and then you got no lockup. I mean, yeah, liquidity is okay on this 4.1 to 9.5. That's actually really good. So basically, what's sustaining this flywheel is people buying the Zyber token and locking up for a certain period of time to get those rewards. However, if you go to the yield farms, this is where your dilution is going to come into play. I don't see any farms.
Yeah, so it looks like under the Earn tab, if you lock up your
Oh,
Zyber
I had
tokens,
to refresh. It was, yeah, I see it now.
yeah,
Okay,
if you had to lock up your Zyber tokens for 30 days, you can earn up to 207% APR, and that's, you can get paid in both Zyber and USDC. It looks like.
yeah, it looks like you got about 4.12 million liquidity on Zyber ETH, and oh yeah, that's okay. So this is where it's coming from. So you have basically 1,146% of that 1,188% paid in the Zyber token. So this is just like a traditional fish swap, and you have like $57 million in stable coins that is just farming the pants out of the Zyber token at 19% APR. And then you also have the Zyber USDC that's diluting it. So what's going on is you have the traditional pools, which are like your wrap Bitcoin, ETH, USDC, and your 3 pool. These guys are driving like the just general trading volume on the DEX with over 120 million. And these are incentivized to deposit into these pools because they're getting like 21% on these stables. So everything is going to be reflexive to the Zyber token. So as long as people are buying that Zyber token and depositing into the vaults and staking them and locking them up, this flywheel will be good. But you're going to have constant buy pressure. So this is going to depend on that TVL number constantly going up. So as soon as that TVL number starts to go down, be careful and just watch out, because then the flywheel works the opposite way. It's the same thing with the solidly forks. As soon as you start to see those come down, like the TVL, the APRs go down. Once the APRs go down, liquidity providers withdraw. Once liquidity providers withdraw, the trading is not as good, and da 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 da. A good example of Zyber is look at Fish, Fish Swap or Swapfish. This thing was trading at like over $1 something. It's now worth 4 cents in a matter of a month.
Wow. Why do you think it failed?
It had a nice flywheel, but it depends on that fish token. So when you're emitting a token at such a rapid rate, now it's good that Zyber has the lockups, which is 30 days, which is good. But then your kick the can down the road is so tiny. With the solidly forks, most people are locking it for 4 years. So you basically consider those tokens off the market. Same thing with GMX. The reason why GMX went nuts and ham is because most of those APRs that started out in the beginning, just like on Mummy Swap, those tokens that you're earning, even though it says like 12,000% APR, doesn't matter. Those are locked. They're locked for a year. So technically your APR is nothing. So you basically have this small circulating supply that's out there. Now Zyber, they do have really good liquidity on this token, which is good, but you're depending on that Zyber token. So let me give you an example of this. The stablecoin pool is paying 21% APR. As long as liquidity stays the same, nothing changes, doesn't go up or down. If that Zyber token, like it's trading at $12, goes to $6, those APRs are now worth $10 or 10% or like 10.5. Would you provide liquidity with stable coins at 10.5%, or would you withdraw at that point? That's something you got to factor in. I mean, it's all opportunity costs. If another fish swap farm like this pops up and says, hey, we're going to pay people 100% APR in stable coins, what do? I mean, I'm withdrawing. It's opportunity costs. I'm going to that 100%. Obviously, as long as it's after I've figured out, okay, these guys aren't going to rug me, type of thing. So just the farms, people are going to farm hop. Just like Sliz, I mean, looking at the TVL, it looks like it's stagnating a bit, and it literally from its peak TVL, which is 118 million, it's now at 116 million. The only difference between that is about 2 million in TVL. What did the token price do? It's down over 50% from all-time highs. Now, I'm not saying it's time to pull out of Sliz. I'm not saying it's time to sell, but you have to factor in opportunity costs. Is it more likely for this to go to 200 million in TVL, or is it more likely for another farm to pull up? Now, you are going to have one that wins the game. Like Velodrome is winning the game right now, which will sustain. But, I mean, again, it's opportunity cost.
That's really interesting. I think it's all great points. I'm just wondering, going back to GMX, right? Yes, is the opportunity to continuously invest in GMX, right? It's the number one TVL on Arbitrum, but is there opportunity to earn more elsewhere, right? Is Gains GNS is Gains still up only? Is it still a longer term play? I mean, recently in the past week and a half, Gains Network was implemented on Binance, and it just went crazy. I think the token literally went from single digits all the way up to I think $30-$40. Is that right?
Whoa, went to 30, 40? I thought it was like
Yeah, it
15.
briefly, and everyone sold off. All the people that were there for the longest time, OGs, they literally sold off for major profits. But
I don't blame him. I would have sold off there too. And
absolutely.
man, that's crazy.
But when you have a protocol that's sitting there at 150x leverage, right? Having that opportunity to just maybe play around with 10, 15, even a dollar, you know what I mean? On their platform to leverage 150x. Yeah, GNS was destined to just go off.
Yeah, yeah. I like Gains Network. But I think it's. I mean, I actually think GMX and GNS both have their own little niche they can play a narrative in. Like GMX is more so like, hey, this is going to be your deepest liquidity, decentralized perpetual exchange to where you can go leverage and whatever and not have to worry about scam wicks. I mean, there are other risks involved with it, but I think GMX has dominated in that niche. And Gains is actually taking on a little bit different niche with some more additional tokenomics. And with GNS, you're actually able to do cents. You're actually able to do Forex. So there's a couple more options. So if you're trying to do something like Bitcoin ETH and you want deep liquidity and something you can depend on, GMX is kind of like the go-to right now for that, even though it's the most expensive perpetual exchange or one of the most, just based on funding rates and whatnot. I made a Twitter thread kind of explaining that, but yeah, I mean they've all gained their own niche, and a lot of the thing or the biggest thing you have to understand with these protocols is that it's they incentivize liquidity, give all these yields because they're going through they call it bootstrapping, but I call it fake it till you make it. So there's been tons of forks that launched up like GMX, but they aren't successful. Why? Because the game's already been played. People know how to play the game, and that's how it rolls. Sure, there are some that may get some market share, like Mummy Finance, but people know how to play the game, and it doesn't work anymore. It's the same thing with Bitcoin. You can't just launch another Bitcoin. People know how to play the game. They're going to accumulate as much as possible when they see that. And at that point, it doesn't become decentralized. So a new game will have to pop up, and people learn these different games. And once they do, it's okay, same junk, different day. You move on to the next. Just like anyone who launches a sushi farm, it's horrible. Like you talk about it, and you're like, oh, I know this is going to go to zero. Whereas in the early days, when Yam, Sushi Swap came up, Pancake Swap, it was like, dude, this is the next best thing since sliced bread.
Yeah, I mean, it's just insane how much money GMX just makes. And it says right here on their website, the fees since 21st of February is almost $1 million. They have $908 million accrued.
Crazy.
Sorry, no, I'm sorry. This is I'm completely wrong. It's 900. It's almost $1 million in fees, just by trading fees alone. They've always almost accrued almost $1 million in their protocol since, was it almost 2 days now? That is insane numbers, and this is why GMX, in my opinion, I see GMX going to at least. Oh, I hate to
They
say
got
this,
a
but
they
I
got
hate to
over
say
$1
this, but
billion in TVL now.
yeah, exactly. And the fees just accrued just $1 million in 2 days, almost. GMX is destined to be 4 digits, and I hate to say that right now, but in the next bull run, which is the next 2.5 years, GMX will kill it.
Yeah, that's crazy.
And I can also speculate with GNS, right? Gains Network. I mean, it's probably going to be the number two. It's going to be right behind GMX, but GMX will be the first run. It'll be the first mover, and I honestly see GMX being at least 4 digits.
Yeah. And I kind of cut you off. You were saying I hate to say this. What was your hate to say this?
Oh, it was just my throwing out price predictions.
Go
I
ahead,
don't like
throw out
it
the
as
price
well either.
predictions. People love it.
Yeah, I mean, it's just it's you're looking at a protocol that literally generates real fees. trading fees, and with the recent blow-ups of centralized entities to like what happened with Binance this morning, right? There was news that Binance closed out all of the perpetual contracts that were ongoing for all of their Australian users.
Really?
Yes, that happened this morning.
Was it
Um,
true or is it no?
it's true, but Binance and then CZ came out and said that they're going to refund people their money, but still, it's still under an umbrella of being centralized, right? This GMX, GNS, these perpetual contracts, the perpetual protocols that are decentralized, this is going to be the future. This like plain and simple. This will be the
Oh
future.
yeah, 100%.
But yeah. So switching gears really quick, I kind of want to touch upon one of my favorite sectors is NFTs.
NFTs. I know a
NFT.
couple of these. I
Yeah,
had
I'm,
some
I'm
fun.
I'm just licking my lips right now just because NFTs is just it's the wild wild west, the true wild west, right? Because it's essentially tokens that are tied with JPEGs. So the idea here is that I'm gonna shout out Valhalla. Um, yes, I own Valhalla. I own a few of these NFTs, but I think that Valhalla is going to be and trying to be the next blue chip. And here's why, right? If you look at all of these other collections, whether they have utility or not, right across the board, if you look at the fundamentals to see if any of these NFT collections has any real revenue generating mechanism, like real world, right? Yeah, sure. Base season, May season, having everything under the board apes, like all of them, they have some type of metaverse gameplay, and the eventual other side's going to go live with the metaverse. But to say that Valhalla is so bullish is that the reason why they are bullish is because they're backed by Stack Studios, which is led by the founder Alex Lin. The idea here is that they are going after they're basically a gaming slash streaming platform that's going to be competing against Twitch. Just last year alone, right? Just throwing out numbers. Just last year alone, Twitch has accrued anywhere from $2 billion in revenue. $2 billion, right? So just in the event where later this year we're gonna Valhalla is going to be um, releasing their beta in the next month or two platform, and then once these content creators go on the platform, once it goes live, the team is solid, right? The team is literally stacked, right, for Stack Studios, and the team is just insane. They literally have these awesome ideas. They roll out, you know, um, you know, everything is. It's not really late. Like no, there's no issues. No. These deadlines, they're always met, right? And so the real money generating machine will be that gaming platform, will be that streaming platform. And so it'll attract all of these esports teams, which they have heavily partnerships. If you go deep into it, they have partnerships with Talon. They have partnerships with what is it, the Sentinels. Some of the big ones. The games are tied to the top games out there, like Valorant, like Apex Legends, and everything. All the big top games out there, like Fortnite and all that. They're partnered up with all of these top esports team that are known worldwide. And if you kind of tick across the board and tally up the Twitter followers for these esports teams, you're looking at over 2 million followers. And again, these PFPs, this Valhalla collection only has around 9-10,000 PFPs. So just think about it. I mean, they're really going to try to go after Twitch. If they steal somewhat like a 5 to 10% market share of the revenues that Twitch has made, which was last year was just alone was $2 billion, we're looking at something really potentially big here. And it's been consolidating. The collection itself has been consolidating around zero 0.7 ETH to 1 ETH over the last 2-3 months. It's bullish. It's basically right now, I think it's at like 0.95. It's just underneath.
Yeah, I
But once
see it.
Yeah, but just right when we get to that 1.5, which was like the all-time high, we're going straight to 2 and then potentially 3.
Straight
ETH
to the
before.
moon, baby.
Exactly, that's the idea. But yeah, I don't see any other collection out there that's actually trying to generate money from their parent company.
Hmm.
And please correct me if I'm wrong, because we have CryptoPunks. No, not nothing against them, but they're obviously the first NFT collection out there, and obviously I want one. But are they generating money at the very back end besides these royalties, if there are royalties?
Yeah, I know you're a big gamer, Ab. So I know you know the gaming sector. This one's obviously in the gaming sector. I know there's one trying to build out IP, like Lil Pudgies and Pudgy Penguins and Sappy Seals.
Hmm.
Obviously, you can see I got a Sappy Seal PFP. But like, yeah, I like both of them. I own both of them. Um, but yeah, no, I wouldn't know enough about Valhalla to say. Um, but I mean, if you're saying it's good, I know you're a gamer. You know your stuff.
Yeah, I mean, just another thing too is that Stack Studios is VC backed, and it's backed by Pantera Capital. Again, if you want to look at Pantera Capital and do your due diligence, Pantera Capital actually manages around $5 to $6 billion in customer funds. So they know
No
what they're
joke.
doing. They do not want to have anything that they invest in fail, right? And there is a rumor that if you get these NFTs from Valhalla, the platform goes live, right? The idea here is that there's a rumor that there's going to be a stacked token that's going to be emitted by staking these NFTs. That's just a rumor. Don't take my word on for it, but I think that that's the idea. The dev team, I just want to do a quick shout out to that. The dev team are all from MIT and Carnegie Mellon, right? If you look at the top computer science, uh, preferred computer science degrees, right? You'll see top three will include MIT and Carnegie Mellon. It's this is going to Valhalla. This is going to the moon.
No kidding, man.
Yeah, but
Yeah,
just give it time.
about the only NFT. Well, I played a couple of them, but the only one that actually worked out for me, checks didn't work out for me, man. It did. I bought at point one, and it ended up going to like 2.5 ETH.
Oh
But how I
gosh.
messed up is I threw it in a pseudo swap pool, so I lost them all before. The second one that actually worked out for me was Pepe or
Hmm.
Opepin, whatever you want to call it. It's one of Jack Butcher's things. So basically, what this is, it's like a not an ohm fork, but it's an NFT Ponzi. Basically, how it works is you have two different checks, or actually, there's a bunch of them. It started out as an open mint, and in order to get like the black check, which is the main one, which I think there can only be four of them, you have to burn different checks. So you'll have a checkboard of like 80 different checks, and then you would have to burn an 80 checkboard and an 80 checkboard to get a 40 checkboard, and then you would have to get two 40 checkboards and burn that to get a 20, and then two 20s to get a 10, and so on. And what that means is like in order to only get two of the 40 checkboards, you have to burn two 80 checks. And in order to get two of the 20 checkboards, you have to burn two of the 40s, which were two of the 80s. So it's just like basically just a Ponzi. You just, in theory, in order to get the black check, quote unquote, you would have to get a bunch of these checks and burn them because you got to go from 80 to 40 to 20, 10, 8, 4, and like 2, and then 1. So
Yeah,
yeah,
as I'm
that's all it
seeing,
is.
yeah, as I'm seeing, and sorry for your loss there because you said you bought at point one and you lost it in your shoot swap. but uh,
Yeah, it
but
all
yeah.
sold to ETH. I made 0.05 ETH.
I mean, it happens to the best of us, right? I mean, we're also seeing a bunch of these derivatives just popping up, all these checks, and it goes into ordinals, and it's just it's a whole crazy industry. I've gotten burned on a lot of them, and I've turned revenue on some of them. So I'm just trying to find out the best NFT collection that I could, easily afford, and I think Valhalla is probably the one that's in my range at this point in time. It's just under an ETH. per, and the community is popping. So if you go right into Discord, you can see that there's weekly events. There's daily Twitter Spaces. Everyone's hanging in the VC chats in Discord there, and just hanging out, streaming some game clips, and it's really a great community. Yeah, you might see Alex Lynn, the founder of Stack Studios and Valhalla there. He's been involved in a lot of interviews lately in the past few weeks. I think the beta for their streaming platform will go live sometime next month. I think it's the end of next month, so that's a nice bullish catalyst there. But yeah, that's really what I wanted to talk about in terms of NFTs there. But yeah, I mean it's a hard market. It really was. I mean, because I originally got into some other NFTs this time last year, and I got burned pretty heavily. And this is the dangerous market. Don't play with anything you can't lose. And I think Valhalla is going to be the next blue chip potential. Not financial advice.
Hey, you heard it. You heard it straight from Abs. I mean, hey, I don't do NFTs, but he knows what's up.
I just noticed one collection at this point in time that's really on most people's radar, and we had buy-in. And if you look actually the breakdown of the holders, you'll see a trend and kind of like a pattern where Azuki holders are holding. Like Valhalla has support from the Azuki community. We also have Beans, obviously, because Beans is affiliated with Azukis, and then we have a lot of these Bored Ape and
Azuki's in
Mutant.
there?
Azuki supports. I mean, they're not affiliated, but the holders of Azuki, they really like Valhalla and what
Oh,
Valhalla is
I
all
got
about. So like the holders are all like, okay, I think Valhalla might be the next thing, the next big thing over the next year or two, which is going to be
Interesting.
pretty nice. So
Oh,
you'll
dude,
see a
that's
pattern where a
awesome.
lot of these holders of blue chips will sing praise of Valhalla collection. But yeah, this has been a lot of fun, Drake. We should do this more often, and
We
I
are
think
going to, man. This is fun. I love this stuff.
yeah, same. I love talking game theory. I think we should probably dive deep a little bit into certain protocols and learning really how to have our listeners capture value with certain types of protocols, right? Like we can go bottom of the barrel and find red light district type tokens and protocols and have that has maybe the potential to really explode.
Oh,
Or maybe
dude,
we'll get wrecked.
this is a newer podcast. We're gonna start DJing. We have to.
Yeah, let's go. Let's go for it.
There will be no viewers, so we'll do a bunch of DJing.
Yeah. Sounds good. All right, thanks for attending, guys, and thanks for listening. We'll continue this and we'll hear from you next time. Thanks.
Dogs, thanks for jumping on.